Alright, do we know if this damn thing works? So I don't have to deal with this damn Discord thing anymore. I have no idea how this shit works on YouTube, but... You can hear me. That's fucking awesome. That's great. Great stuff, guys. Good job. Technology. I don't... Apparently it wants me to, like, up the data or something. I got no idea. We'll see if this works. Looks pretty good. See, I can upload in 2K, but then on Discord it's like, no. I don't care about the quality of the video, but I think there's obviously some issues with Discord, because if I can upload this amount of data, then that's silly. Anyway, let's try to get back into the swing of things. Volatility continues to push the dollar. When we look at the dollar, it's staying pretty consolidated. So we're gonna continue to watch, right? Continue to watch. Now, everything's just kind of hanging out, but again, the whole value idea, especially when you start to look at healthcare, things like Unum and the big boys, they continue to put points on. It's really hard to ignore where the money's going. It's really hard to ignore it. So again, we don't know where volatility is going to go, and if there's too much volatility, when you think about the volatility, you don't know exactly where it's going. We want to buy on it, but we don't want to buy on it down here if we can buy up here. So again, we keep pushing positions, and the idea of new positions, we're going to hang out, right? Tech is selling, which again, short tech, fuck Facebook, the usual. Travel continuing to look good. So again, until something changes. Now, you of course can transition. You can transition. When we take a look at some of these positions, something like the average pulling back this much. Again, if you're tied to the average, you need to obviously be mindful of that idea. So, for instance, your guys' position. I'm not sure what you guys want to do. Let me see, what do you guys got going on here? Let's see. Looks like we're getting a bounce on that support there. Pop that open. Okay. So again, yields, all yield oriented. Bring this over here. Okay. And these continue to look great. Continue to look great. What do you guys want to do with your position? You guys are now plus $65. $60. You guys want to get stopped out at break even if it goes? It looks like you're popping back up, obviously, but do you want me to put a stop in there or what? I mean, you guys are still positive, so. Still positive. X still green on the day. I mean, it's going to be interesting during lunch, that's for sure. Certainly going to be interesting during lunch. This is mostly on the growth side. If we bring it over to the Dow, Bring it over to here. Hasn't been. It's minus 18 basis points on the day, 20 basis points. Barely moving, and a lot of these charts continue to move. Let's take a look at some derivatives here. So VXX coming up to the trend line, right? Sort of our understanding is as this trend line breaks, there's certainly something there. What's interesting is the yields haven't really changed and volatility is now continuing. So again, it's more tech oriented, but where's that money going? Definitely, yeah, transition where you can, of course. Again, if you see, you can be in a position to be like, well, I got points in the morning. Maybe I'll be fine. If you have questions you don't know, then anytime you have no clarity, you got to know that just as much as you don't like an unclear position, the market doesn't like when there's no clarity, right? So we're definitely not going to be ignoring things, that's for sure. This is obviously as soon as that level breaks in here, that $19, as soon as the 19 breaks. Bring it over to our benchmarks. Energy. Look at energy. Again, really painting a picture. Banks really painting a picture. Again, that's all you need to know. Again, all you need to know. I see flows. It's going to be really interesting to see what goes on over here. All that shorting and volatility. Every time we get a spike. Then they don't... Think about it. You short volatility non-fucking stop. If there's a spike, you don't start to sell your short. You don't sell your short. Let's take a look at SPY. Does tech hold its average? Is the question. Now is that coming back down to the support down here? Small caps holding their trend line. We'll see how long this lasts, because again, there is that growth side of the small caps here. We'll see how well this holds here. This is so tied into this volatility here. Still not getting much movement, especially on the travel side. Travel's not beating its low. Don't really want to do anything with those positions, and banks just keep fucking tearing. So, again, like Brian said, it's not the sexy names, but again, does anyone really care about whether it's sexy or not? Does it need to be a sexy ticker for it to be tradable? Like, yeah, it's like we were joking about the Planet Fitness thing. Like, yeah, I got rich trading Planet Fitness calls. Not sexy, but yeah. unfortunate, wasn't something cool, no one really cares. And it's actually fucking cool to make money off a non-sexy name. So let's be realistic here. Aerospace and defense continuing to look very good. Look at GE. Again, you see other things that are happening. Again, if you're on the right side of the market, like we've been trading, then you feel pretty sexy. So hot to crazy ratio does not apply here. If it's not sexy, how can I brag to cousin Greg? Exactly. We're really killing it on this idea here so far. Again, I think this is certainly one of the better things, and even something disgusting like BA putting into points here is really important to be able to see here. And big healthcare continues to do well here. Banks doing well. I keep looking at this chart. Fox continuing today again. This move, again, another non-sexy sort of thing. But again, when I talk about this breaking to the upside and how it's very easy to get caught in this idea that this trend is not sharp and that there's not much to be gained here, it's you got to be able to make the trades like this that are we're not doing anything different. We're not convincing ourselves to take a trade. We're following the same principles that we've been following. Now, sometimes when we take these trades, it is on something that is sharp and there's risk involved, and the points are just exceedingly exponential comparatively to something else. But this kind of trade that's very value oriented, not much movement, has a very similar idea of supply as other charts that we understand. And then this kind of gain here, again, you start to buy this anywhere in here, it's too late. It's really too late on a chart like this. Just everything moves. It's like it's just like this whole idea with aerospace and defense. It's very hard to go buy GE here. It's almost impossible to go buy it up here. Everything has already moved because, again, if it starts a move, it's not going to stop. It's going to take a lot to stop it. Fucking Newton's law in the markets here. SKT, we'll see how this pullback continues, if it does. FANG continues. Again, this idea of this move, again, you got to be willing to push plays. JJR says not sexy. Money is not sexy. Okay. And again, REITs as well continue to push, right? So the true disgusting value plays. Sats from yesterday. Do I know what the company does? No. Something with satellites? Here are the tickets from yesterday. Let's take a look through. Sats. The most clear. ST, opened high, has been selling down. Possible pullback buy here. FRO through the level, straight forward. 716 breaks, you enter. Western Union is all bank oriented. WU is fucking terrible, and you can see that it has not been moving with the rest of banks, right? When we look at the average, has not been moving, has points to retrace. Obviously, I've made fun of this chart plenty. But what's the difference here? It's finally broke out of its consolidation, has very easy levels to trade on. It's very straightforward trading. So again, there you are, straightforward. RSX, again, I talked about yesterday, you need to start getting comfortable with some of your charts that sort of doji through. All your price action is after pre-market and after hours because it's tied to something else. So again, RSX tracked against Russian companies. Russia's economy is absolute shit, of course, but it is on the oil side, and we have some ideas about some bets on oil, right, in value. So here you go, RSX. Again, we've traded this back back over here with the presidential election, right? We had an understanding of over here. Let's get back into it. KNX, a chart we've traded a bunch. We've traded through this whole move here. Again, this distribution in transportation sort of side of things has continued to do well. It's been consolidating because we sort of priced in the event already. We'll see how this goes. Again, all these are just holding value reads. All just holding. No clear buys on any of these charts, right? And this one actually rejection off the break coming down to the trend line is possible, but we do have we were long on home builders, and then what happened? We got a lot of uncertainty. If this breaks that 18.5, then it's possible up there. But so even on a day like today, recent breakout charts showing some life. Those are just last night's. Box, interesting. TW, TDW. Look at the average. Okay. Well, where does the volatility stop? When did the yield stop? When did the yield stop moving? They've stopped moving. They have stopped moving. You guys want me to go take a look at your friends over here in Rocket Land? You guys are doing great. Oh, good. Now, I did give you a short-term pattern. I did give you a short-term bullish pattern. Back over here. This move makes sense. This move squeezed, and for whatever reason, what fucking newspaper was it that put it in the newspaper that possibly Wall Street Bets will be buying? Like, what in the hell was that article, by the way? Or on the front page of like a newspaper? That's just like next level ape strong together kind of mentality to put that in there. Then it causes a buy move. I mean, very, very interesting. In aerospace and defense, TGI is one of the fun ones. RTX, those are sort of the two more retail friendly. TGI and RTX, and then again some SPR, GE, sort of our more big boy oriented. Trip continues again. This has not let you down. Again, this intermediary between an idea. Trip, we talked about sort of like Expedia and TCOM being the leader over here, and now Trip is taking sort of the torch over here as the rest of travel starts to move. This whole move through here, now it's consolidating. Pennant, again, this is tightening. Which way is it going to go? Well, the whole travel market's going to the upside, so might be a sign. Retail stores continue to push. These have not moved at all today yet, so again, keep that in mind. These have not moved from the market, not getting affected by averages. In banks, again, it's really, it can't be understated that if you were not a part of the move, you've continued to miss out, and there's nothing you can convince or tell any of us, not even your cousin Greg, that this move from when we took it, this is JP Morgan, for example, but we talked about it through the XLF, there's nothing you can do to tell me that this non-risk play, this zero-risk play, you found something better, and there was something else that you should have done. You didn't have to do any research. You didn't have to look at any charts. It was all flows. You didn't have to do anything. And I said it back here, said it here, said it here, said it every day. You got to be a part of these. And again, this is a marginal trade. Banks don't fucking move. Energies don't move. For every 1%, you're getting a significant amount. You're making hundreds of percent from that move. I'm sorry, but you're making 100% and you didn't have to do anything. There is no risk there. There really is no risk. JJR says, Netflix 10-minute chart looks great. Have a look. Let's take a look. Here it is. Rejection on the trend line. It attempted the break, and like I said, if we were going to take the long side instead of the short, that again, this was sort of our first tech short from a couple weeks ago before the market started to remove a lot of tech positions. Shorted Netflix, and then when it came back through here, we talked about if it breaks this level, we would look for the long side. Never happened. Continue to get rejected. And again, here's the move. Should we go buy it? What about now? What about Facebook? What about now? That looks like some confidence. Looks like you always say during volatility, tech does the best. Well, maybe it's your time, guys. Maybe it's time. But to me, it looks like volatility might be turning here. I don't know. Is it the end of the world? I don't know. The yields have stopped moving. Maybe during lunch. Maybe during lunch. Maybe during lunch. We're doing very well with value here, guys. Very good stuff. You can even see on the bet side, right? Look, take a look at the derivative. Again, use the derivative for movement. Use the derivative for movement. Himble says, M looks like a tick about to pop. What's, again, I've been talking about that chart for like quite a while now, and I know every time I talk about it, it doesn't look like it's made a move. If you go look at that chart, it is up. It is up. It seems like, oh yeah, it's just been trading flat here. It's not. It's not. It's not trading flat. But then nothing, but again, it depends where you buy. If you bought down here, if you bought on this move from here, this pullback, when you take the buy, this move here to here is 10%. And then what do? We bought on the pullback. You bought anywhere in this pullback, anywhere in here. This spread right here is almost 16%. This spread is on this candle. You bought anywhere in here, which again, we were buying everything during this. We bought everything during this. If you bought anywhere within there and you were able to time it within that 30 minutes, anywhere in here, even if you bought all the way up at like 1469, nice. What's happening during here? Your underlying might not be growing on a trend, but you're pumping volatility and your premiums continue to rise and rise and rise and rise. You have to just be in this position. You have to just be in it. Why? Because every single chart that we've talked about in this sort of fashion, what happens here? As soon as it breaks the supply, it fucking skyrockets. Why? Because the amount of options that are being bought in here and the IV increasing, the gamma's not, you're not moving much, right? Think about it in terms of acceleration. You don't have much acceleration. As soon as the supply breaks and the momentum does start, well, now there is acceleration. It just seems like it's dormant, but it's not. Again, this is the kind of move that this is value. Look at the other retail stores, right? Think of the other stores and the idea of convergence. These have broken out of their consolidation. We're able to make the move. The others are going to converge, and they're building. That's like that fucking launch pad. How many times, like last year, we talk about this fucking launch pad idea of trading flat, and then see you later. If you weren't a part of the position, you can't chase it after. It's already moved. It's literally just too late. It's just too late. That's going to be that kind of position. Now, it's not absolute. No, it's not absolute. Of course not. It's not absolute. But the probability is certainly on the upside. SKT. This is the exact same thing. Now, I think it's probably just the mentality that since you can see this is going up, even if it's only 1%, 0.5% a day, you can tell that it's moving to the upside, so maybe that gives more confidence. But again, it's the same idea. If the breakthrough supply, in every single one of these candles, you're getting a higher and higher exponential, right? You're curving on options. So let's just say this has no ticker name, and just this ticker alone is it is what it is. Again, the exponential, it's like this. Look at the curve on this chart anyway. I draw a curve and you can see how it's rounding. This might be the underlying curve here, right? This might be the underlying curve here. However the fuck it is. And on the options, what's happening? It's much further. It's much further, right? The exponential. You're well ahead. You're well ahead on the options, right? You're well ahead. I don't know what the actual relation would be. If this is, I don't know. It's well over 5, well over half. I'm saying, the exponential, right? And if you don't buy in at the low end of that move on the options, again, that's where the option charts. We talk about charts and buying support, selling resistance. Well, what if your option chart has already started moving before your underlying? And then you try to buy when the underlying is breaking through a level, but the option chart has already done that fucking 2 days ago. Well, now you're not really following your rules if you're buying 2 days late, right, on the options because they already moved. There's a lot of examples of this, right? A lot of examples out there. Oh, volatility getting shorted, boys. Sorry. Let's take a look around the averages. Here's the S&P. Okay, the thing to also remember here, guys, S&P is down 0.5% today. 0.5%. NASDAQ down 1.5%. Okay. Russell break even. Russell 2000 break even. The dark horse, the Dow, is green. 20 basis points. Fuck me sideways. I wish Sally and I wish Greg told me. I wish Greg would have said something. If only there was a way. And wow, if we look at our buy watch list here. Fuck. Oh, and I missed some of your comments because now we're on YouTube. Roku is always a buy. Now, it's doing the tech dance down here, which I do not like. I do not like this sort of... The pullback was great. We took advantage, but now this is all tech looking. Don't like that. Get back inside the trend line. We'll be a part of it. JGR making the Zoom earnings do not matter joke. There you go. Now, there's so many different things that could have possibly happened here. I'm guessing any single possibility you just broke even on every single one of them. So, yeah, none of them mattered. We're just back to where it was. Too tied to tech again. Too tied to tech. Now, what's the difference between this COVID winner and the other COVID winners? Let's talk about Etsy and Peloton. This big move here, what happened here? Tied to tech. Tied to tech. What did Peloton do? Peloton was not able to make the move because it's a day behind. We talked about Peloton tracking Etsy. As soon as it had the chance to go, as soon as it had the chance to go chase that, it did it, right? It's going to be really interesting to see what happens coming out of this because just like the reason why Etsy was making this move here was that it was not tied into tech. It was tied into a COVID winter idea, not fully on the tech side. And so these are pumping a ton of volatility into them, still up on, it's still up on this trend. So there's definitely possibilities on these charts. There are possibilities, and I think taking advantage of these is certainly a nice short-term opportunity on on trades that no one really knows. There's really difficult stuff, and you can just technically trade it. Break the neckline, take a trade, in and out when you have opportunities, right? If you have short-term opportunities, absolutely. X continues its trend to the upside, continues the trend to the upside, and again, value as a whole continues. You can be realizing gains on these positions, but you have to be able to re-enter them, right? It's very important that if you guys exit these trades, that you're able to re-enter them when that opportunity presents itself. So, I mean, it's the hardest fucking thing to do, but you have to be able to do it. Viacom continues to trend. Free Willy continues. I mean, what is this going to do? 69 by next month. Nice. DraftKings continues. Excuse me. We'll see. Greg did tell you. I remember it. I'm starting to think you're just passing off Greg's ideas as your own. Greg judged you. Maybe I really am Greg. I don't know what you guys are fucking talking about. It sees a potential buy with the flag. Yeah, so again, the SeaWorld trade, I actually don't know if any of you are in this trade or you meme with me, but this obviously has been a good trade. So memeing aside, do you have to take, so what I want to do, if you entered anywhere on this trend in here, you still have a position, or if you, well, let's say if you're in a position, so again, you look at a chart through the lens of trading, if you're within this trade, you entered anywhere on this trend, you'd still be pushing this trade, right? You would have, there's nowhere in here that you would have taken profit if you entered on this trend or this one. Now let's say you took profit on this move, right? You took profit and then bought on this dip here. Did you take profit through here? More than likely, yes. If you entered on this pullback, you probably took profit on these two candles. So let's say you, so again, if you were within anywhere in this trend, you'd just be pushing it. So pushing is also another way of saying I'd be a buyer here. Would you be a buyer here? Do you need to wait for the breakout? No, you could be a buyer on the pullback. So you don't necessarily need to wait for a flag breakout or something here. Is it a flag? No, it's not a flag. Is it a pennant? No, it's not a pennant. It's nothing. It's just tightening, right? There is no pattern here. All that's happening here is, again, look at the differences of the trends here. You had a pullback, it got bid. Got a pullback, it got bid. It just pulled back. It's just trending. The price is just trending. It is a buy through here. It is a buy through here. And the difference on this chart, like, look at this price. It's just trending to the upside. The difference on this chart, again, is the way the fucking supply works on the options. Go look at the chain. It takes one look. And again, when I first brought up the idea here, what was going on over here? We had, I don't know, 90% of all the options were in one fucking contract in January. Remember? Go look at them from over here, right? What has happened through this whole thing? This was our trend. Now look at our trend. There's major speculation, right? There's major speculation to the upside because of momentum. It went from being a trend value chart to a momentum chart. What do we expect value to do? What have I been saying about value? We've been trading value and it's been trending up. We've been doing fucking great. What's going to happen next? The bet is that value is going to turn to momentum. Momentum being you go long, so we would be going long in value and you short the other side. The other side would be tech. That's what we've been doing. The momentum trade is turning into value. The value tickers are becoming the momentum trade. It's going to become sexy. So again, it's great to trade Apple. It's awesome. I love it. I love trading Tesla. Woohoo. That's going to change and people are going to be, the markets are going to be a little bit more momentum oriented on these value picks. Look at how travel's changed. Think about some of these, think about the mentality of how we can joke about something like Death Boat, CCL, right? We can joke about this a little bit. But this was garbage, right? Of course it was garbage. No one who wants to be a part of this. Why would you want to trade cruise lines on a fundamental basis or something, right? Think about the difference now of trading this. Is this fucking value in like the? I'm not talking value as in the value tickers that have to retrace, but value investing of like fundamental ideas or something. No, obviously not. What's happening here? Fucking momentum. It's momentum. There is momentum in this move. It's gone from just fucking, you know, being something that's worth nothing to being worth something because of momentum, not because anything changed. Nothing's changed between this point and this point, other than speculation. It's all speculation. All of these value ideas are just speculation. There's nothing. They're not doing anything better. They're not changing anything. So, again, there's a reason why we continue to trade these, and they continue to turn into a momentum idea, right? They are doing that. So, as much of this is our fucking, when we talk about the meme economy, as much as this was our meme, it's not bad. It's not bad either. And there's not really much risk. You take the trade on the pullbacks within this trend on breaks. But certainly we want to be buying on pullbacks and support the most when we can. We wait for breakouts when there's risk involved, right? When there's too much risk involved and we're not completely sure. But more times than not, you're buying on pullbacks on value. That's more times than not, because that's the whole idea to begin with. You're buying something that needs to retrace. I mean, again, we continue. And again, those of you that did not see when I posted this chart, because I posted it at a weird time, we're using this for all of travel. So this chart that I posted for NCLH, this is a log scale weekly chart. You can use this idea if you find any of your sort of travel, the whole tourism sector, sure. If you log it and weekly it, and it's got this sort of flag mentality, some sort of consolidation through here, right, through December into the new year, and has something like this, even though we were very bullish, right, coming into the end of the year, as we went value heavy from presidential election, right? If you have this sort of look, then you can use this log scale weekly chart as a plan. This is the plan. This is the timing that we're looking for. This is the timing that we're looking for. And we're on pace for that, right? We've been on pace for that. So, again, every opportunity we have to enter, we're going to take it. And so when the market gives us volatility and anxiety and pullbacks on an average, then we have to take advantage of it. Otherwise, we're not. It's hard to, I don't know, do fucking anything. We don't chase. We can't chase. Yeah, DBX loves volatility. SDC loves volatility. Now, I've just been sitting in this position. I have no idea what happens if you're trying to wait for the trend line break here. That's, of course, with a technical understanding, that's what we would do. We would wait for the trend line, but I have no clue how that's going to go. SDC has not worked. Continue to fall. It is on a trend here, so it is consolidating. Look at this is pretty clear. This is pretty clear. The idea of this price movement, right? We'll see if something like this ends up happening, right? We'll see if something like this happens. It does like volatility. It does like volatility. So you could get something around this line. The price, not really like the price, and I'm really pushing it there, but this doesn't really fit. This would not fit. So it is pretty sharp. It is pretty sharp. We'll see. But that one is just horizontal oriented, so we don't really care. BRKB continues again. The big boys continue to push. Not sexy, right? Feels kind of silly. But guess what? You don't need a fucking chart to move 10% every day on the underlying to go make your 100% on your options. You don't. You don't. I think a lot of the times for some of you, all you got to do is go look at the difference. Go look at the options and what they've gained over a certain amount of time comparatively. For instance, you look at this move here. This is 9% on BRKB. Now go look at the options in relation to something else that did like 30% on the underlying. This did a lot more, gained a lot more. It's a tank. It's fucking big. Doesn't move as much. So when it does move, you get paid. Some of you looking at this chart and going, wait a second, you posted a Berkshire Hathaway chart? Huh. Okay. Okay. Aerospace and defense continues. So again, our leader with energy and banks. Lyft again. After this move, what I talked about was we wanted to be a player above this resistance here, right? There you go. That whip there was an opportunity. Now you look at the Uber chart again. The Uber chart is significantly further behind, but this lined up very well with support. So again, this was possible. It was possible. We broke this idea of a trend here, and again, we sort of had to average it a little bit, but we understood that next candle would pop out, support buy with Lyft also breaking. That's enough convergence and enough to make it that a buy. You don't need to force it. It made itself happen. We planned for it, made itself happen. Gonna be really fun to watch lunch here today. Lower liquidity, watch some fucking spreads go wild. Again, retail stores, SBH continues here. Again, I don't know what you want me to fucking tell you. Retail stores. There's a lot of them. There are a lot of them. I know you guys have asked about multiple different ones, but at this point, I posted like 20 of them, so. And they were the leaders, so if you guys post something that's like now catching up, sure, it's going to converge to the rest of the sector. But we like to trade the leader here. I want to make my money yesterday, not tomorrow. Let's see. You guys are back to break even on the day on your IWM Aprils. You back to break even. So you've got $269 unrealized. Nice. I like how I've had no internet problems with YouTube here. Really makes you think. Really makes you think. All right, let's go around. Let's go around. Volatility. Pulling back a bit here. Now again, this move doesn't mean anything on its own. We look at the dollar. Any money entering the dollar? Does it look like it? Nope, looks like it's selling to me. So, what's happening? We got volatility, the dollar, yields all spiking at the same time, while the tech side of the market sold in relation. Those are all the same thing. Now what do we have? We have the dollar pushing back down. Now, not too much, but it's the movement that matters. Not the value, it's the movement that matters. This is pushing. What's going to happen here? This gets going pretty quickly. Momentum gets going pretty quickly on the dollar because, again, it is such a marginal sort of trade. So every basis point matters, right? This is going to cause, go look at the volatility, the derivatives here. This movement here, we'll see how this continues. And then, of course, we saw the flow, so that, again, that inverse correlation between the spot VIX being tied to S&P futures, but only to the negative side, right? Oh, well, there's no such thing as bid volatility on the spot VIX. So again, you see the money, the flow come into value. And again, really, this is the part that I care about. Look at look at all of this movement on the Dow. This is the DIA, just the ETF for the DJI, the Dow Jones Industrial, those 30s. Look at all of this in here. That right there, that price movement is not like the others. Spot the difference in this picture. Remember those? Remember those little fucking books we had? Spot the difference. Looks a little different to me. That looks like some fucking money. That looks like volatility. That looks like movement. What has changed? What has changed? What did she do? It's what did you and I do? What did Greg do? Greg didn't do anything. We all started trading it. That's what happened. Just we're getting confirmation that, okay, no one was doing much of anything. We wanted to be a part of it. We were trading these. And then look, a few days later, what happens? You get a lot of fucking trading happening. A lot of eyes all of a sudden. What happened? She get a haircut. She's wearing a better outfit. She's obviously looking a little bit better than before. It's like those movies where you get the ugly, the protagonist is ugly, and then they make him look good. This is like Spider-Man 3 for all you memers in chat. There you go. Peter Parker going emo. That's what this is. I hope that's a good one for you young guys. Oh, God. I'm waiting for the momentum to get going on aerospace a little bit more. Not that this is not a big move, but I think the spreads is definitely going to cause a bigger move here. Will it happen on something like GE? Really not clear. But again, look at the movement difference. Again, the sizing of candles since this breakout really tell all what happens when the spread gets a little wide. We just trade flat. We either trade flat or we get really big bid spreads and it's really hard to buy and people start paying premiums, start really paying a premium. Lift's continuing to go here. Again, if that blows back through the high, just momentum, and that's going to be terrible with spreads. You can't buy it now. If it does break the high, you can't even buy up there. So. One of our other favorite memes, CSPR, Casper Sleep, the triple pillow top Tempur-Pedic mattress that comes with 2 free pillows, not just one. They are upping Bob's Furniture. So on a fundamental level, because we love fundamentals in this channel. That's a joke. Doing very well still. Very well still. Big buy opportunity there. Again, it doesn't matter what the company is, what the symbol is. It matters what price is doing. And if you can't see this price movement in here off the support, I don't know what you're looking at. The sun will rise every day. You can say, well, won't it also, the sun goes up and goes down. Okay, good one. This is a slow-moving sun, okay? Every candle's an hour, all right? JGR mentioned SQ. Again, SQ and PayPal were very bullish on since Friday, entering those trades. Are you selling on this pullback here? No. You entered on this here? Are you selling here? No. You don't have a relative reversal. You're pretty fucking close. But also what's happening in your options here,
through all of this pullback, you're actually gaining volatility because of the broader market. So you have to be, it's not diamond hands memes or any dumb shit like that, right? What's happening is as this pulls back, you're gaining premium from volatility, right? And so, again, those of you that don't understand that, I get the video coming. We'll see. Last night I fucking died, had a little gathering, but not enough time to make a video for you guys. Those of you that don't know, you can have something trade flat, even pull back on the underlying and gain on the options, right? Because of volatility. Volatility, that IV is a big part of your price. This is no exception. On Square, go look at your IV charts for the monthlies of squaring, for instance, and go look at how that changed today. It actually increased again, right? Increased. I mean that chart's very easy to see. So. Let's see. Again, the question here is for lunch. What can we do through lunch? Next, coming back, right? Oh boy, who would have thought? For lunch, it's just how much do you get pulled back and how much can you push through if you're not getting the move. I mean, it looks like melt so far. Even tech is not being too much of a blister on the average. And again, the Russell 2000's up 0.5%. The Dow is up 25 basis points. I mean, and again, the Russell 2000's usually double this move anyway, due to the small cap size. We continue. A lot more trading going on over here as well, which is good for those of you that have been playing around with the DFEN as well. A lot more liquidity in here. Take a look at the connection between these candles and how it usually trades before, this kind of gross, low volume environment, right? And then look at here. Very well connected, good spreads. Certainly helps with the options. Why? Because you're breaking through the supply, right? As soon as you break through the supply, it's attractive. It's attractive. You don't want to trade something that's leveraged that does not have the move. If it's not, it's not even implied. It's not even implied until it breaks that, which is again why as soon as that broke, now your options are worth something. Wow. But again, you have to break them resistance levels, break through supply. It's too much supply on top. EB, absolutely all over the place. Again, you gotta love something like this with this volatility. Take a look at the trend though. Higher low, higher low, higher low, higher low. What do we do in terms of understanding trends? We look at the lows. This is a higher low. This is a higher low. Higher low, higher low. Now we broke through resistance. Now there's some resistance up here horizontally. Right over here. That's where it is. That's your resistance. You break through here, what's gonna happen? There's probably a moon up there somewhere. That's a lot of black space. I bet there's somewhere to go. That's been a very fun chart to trade. Very fun chart to trade. We continue. Unum now at 5% or so, just under 5%. Healthcare, tier 2 this year. Again, tech, it's just not going to move. Tech is going to be the tier 1. It's just not what we're trading right now, right? It's not what we're trading right now. Eventually, yes. So what does that mean? Healthcare. Healthcare is sort of our tier. That's our first tier sector right now in terms of that long-term idea. Now again, in the trading that we're doing right now, it's all value oriented with banks, energy, REITs, travel. Those disturbing names that if You said that before the presidential election, you would have made someone shiver. You would have gave goosebumps to the market. Not that they weren't making blue bets, but if you told them that this is where price was going to be, then none of us would have made money because no one was betting on it. No one was betting on it. Fox, 5%. Continue to push. Bring you over to volatility again, show you. You can see the move happened, right? You can see the move happened. What happened with yields? Well, they stopped moving. That's what mattered. Yeah, 2-year, 5-year, up over 10%. 10 years up 6%, but it hasn't moved. It hasn't moved. It's staying where it was. And if not, dropping off. Coming into Europe close, London's doing fine. Because again, what is Europe? What's the difference between the way we look at Asia and Europe? We use Europe as a very big value indicator, but they're also fucking aggressive. London's aggressive. You know, is everyone in London a drug addict? I think so. I do think so. Yeah. So they are a little aggressive. They're doing fine. They're doing fine. They're actually liking the volatility a little bit, it looks. That's not to hurt anyone in London's feelings. No, nothing wrong with that. You do whatever you want to do. Enjoy pleasure however you want to enjoy it. The Swiss franc, thank you. SXY, thank you. The dollar, again, pushing down. Now, top of the list is getting a little bloated. We're starting to get bloated as the day goes on. Starting to get a little bloated. FLNT continued. DY. Are things tied to spending in the economy? What a move here. What a move. Didn't capture that. Lift again. Like I said, if you weren't able to get that, then you're going to miss it. So, yeah, that was 5 minutes ago, by the way. Can you buy it up here? Hey, Don, I just woke up. Just woke up, man. Is there anything to buy? Can I buy Lyft? I see that Lyft's up. Can I buy that? My Greasy Fingers Robinhood app just popped up with Lyft. Can I buy it? Well, if you woke up 20 minutes ago. So all of us that just took that trade are going to get paid. Now, Uber's a little behind. You got chances. You got chances. You got chances. All-time high isn't all the way until up here. What are you going to do if this goes all the way to here? Yikes. That's going to suck. Do what you're going to do. But again, when we look at those moves together, important to see those together. It's not even something that's on our list of is whether it's value or not. It just is what it is. Again, we're not passive investing. We don't group everything together. We are individual ticker based. We're active. We trade and pick. Right. We're gonna pick what works. That's why we track breakouts and trade them. We trade them. And retail stores continue, especially those oriented towards the food and beverage side. That's been a little bit more the focus this week. Again, Unum here, let me just show the chart. Very much like what I talked about earlier. This is a tank. This is a big boy. These underlying moves in relation are much larger on your options positions compared to something that moves fucking 10% every day. Already had volatility. This is a big move. And yeah, again, we made all these trades at the same time, guys. Why do I keep doing that? ANTN. Yep. Again, we made these moves all at the same time. This is a very small part of the move. But the problem is here is that these are long-term trades. Yes, you can take a long-term trade at any time. Again, we're talking long-term trades here. We're not talking I'm going to hold it for a week. This move is about all of the supply, right? It's about breaking through all of the supply in trading up to the upside. And now I know there's all kinds of fucking graphics up there. But again, we're looking for a big move on this trend. You get in this channel and you just trade it through. Pulls back a couple percent, 1 week. Doesn't matter. Now, could you trade it in the short term through here and capture it? Yes, of course. Of course. You can just take really short term trades and trade if you want. Again, it doesn't take many percent to get a big exponential. But what's the highest probability way to trade it is to push it further and further, because no one's doing that. No one's doing that. TGI's trend line comes in at 1780. 1780. I like the movement. I know we're not trending up. I know we're not trending towards the upside overall in a lot of these on the average. But again, we don't care about the average. We're not trading on the average. We're not average traders. We trade individual tickers, individual sectors. Trade them through their moves. So again, even though this looks fucking, I mean, it is kind of, again, the Dow is just disgusting. I mean, this chart is terrible over here. What is happening? Demand is just elsewhere, right? But over here, you gotta like it a lot. You gotta like that tightening. This big spread, pumping volatility, giving you chances. Again, the small cap, sort of a space that we've been using as our understanding. Trending down, but volatility pumped out of its mind. Where are we on the options? We, again, are, what's happening through all of this? We're starting to curve further and further to the upside, right? So it's like the price is coming down, right? But what's happening on the option? So we are curving down, but as this comes down, it's actually increasing this exponential. So the more this comes down, right? The more this comes down, the more the exponential gets greater as the price goes to the upside, right? So if you look at it like this, so if this yellow line is the options, as the price comes down on the average, it's this. This is the IV. This yellow line's the IV on the option. As it comes down, it's increasing the exponential, and you're getting more and more and more and more, right? That's cup and handle. There you go. Exactly. Anyways. Open. Yep. So Brian mentions open. 35C Aprils, he says, are active. I would imagine. A lot of supply in here. Interacting with. Now, getting affected by the market. This is getting affected by the market. Affected. Now, that's quite the volatility in there. So, I mean, if you entered on this thing, then you're probably pretty happy with this. Considering the volatility. Let's take a look at semiconductors. So, we talked about semiconductors. Half of them are tied into the tech side. So NVIDIA continues to get pushed down, right? Continue to get pushed into it. We were looking for a gap. The gap idea didn't happen. We actually gapped down. Gapped down with tech. AMD's still completely trash, right? But it's all a support. What's this look like? Looks like the Q's over there sitting on support. So tech all sitting there on support. So eventually going to offer something. And then what about the semis that we're most bullish on? TSM tightening right into the support and a trend line. So the next candle, if it's above, is at 126, is certainly looking good for the rest of the week into next week. Now, these are tied into tech a bit, but we understand that there are sort of cycles within this. There are cycles within semis that tech does not have, and so that's where we want to be a part of it. So the pullback offers the opportunity to enter, right? We want to be looking for that opportunity. These are all coming into some sort of trend line or something, that tightening. So even though it doesn't look good and we're not going to get a breakout, we're going to look for that support buy across the board, right? So certainly getting closer to the end of the week, you really wish this was Friday here, and you could be buying this on a Friday, right? I mean, it might be. You might get the tightening right into Friday, and you get the chance to put that through the weekend, and that would certainly line up very well. DD continues, right? Dupont de Nemours continues. Our Dow 34,000 is coming. It's coming. Retail stores, Under Armour, getting ready to blow through the high. What do we like? We like these upside breakout kind of moves. It's half an upside breakout. Half an upside breakout. Win is a winner, always. Again, banks just, I couldn't imagine just watching those. Hog. Go grab the hog. No, you sick fucks. I don't mean that hog. That looks like some fun. That looks like fun. I've been talking about the last few days. You get that break? That is fun. It's a bottom. It's really hard to. It's a bottom wedge. You get the wedge in here. And then I guess this is the downtrend because it's a gap down. You can use that as the trend. I mean, you can't really use anything else. So just looking at this tightening here, it's a consolidation towards the upside. It's what? Gravitating towards supply. Looks like fun. Something to be a part of. QFIN tightened here. That's a must. Oh, excuse me. I couldn't mute you guys in time. Sorry. Dying over here. Brian says MSOS. Very close to that 50.5. This is going to be very straightforward. I mean, look at this candle over here as reference. Those of you that looked at that chart. It's new. So, again, I'm looking for some newer sort of SPAC mentality kind of things to take advantage of. Because, again, we want to take advantage of retail where we can. Obviously, we're bullish on pot stocks. Use this candle as an understanding of what would happen through here if it's breaking, right? This trend here, again, we're trying to continue this trend. So we need it to look like that. Very close. Now, what's this usually at? This is lower volume. It's lower volume. Doesn't really, I would say, it doesn't really give you very good direction intraday. Obviously, you can tell by the candles here because of the volume. So you gotta preempt it a little bit. You're gonna have to just go with it. So, like Brian said, curling, that might be what you gotta use, right? Sometimes you're just gonna be fucking wrong. You can wait for it to break the level, or you just go with the trend. Now, when we look at pot stocks, what happened? Well, we had all kinds of crazy stuff going on the last couple of days, right? We're still up on the trend. So if you bought on that Friday, you are still up. You are still up significantly across the board. Just doesn't look very big on the candles. You are still up, pushing. You can buy on the pullback here. Yes, you can wait for the breakout. We talk about waiting for breakouts, break the trend. Sometimes you just got to buy on the fucking way, what it looks like the way down. It's not going to be the way down if it goes to the upside now, is it? Sometimes you got to be able to buy when the price doesn't look fucking right. Which is why we bought on Friday, and we get quite the gains across the board, right? It's very hard you can't go chase this. As soon as the move happens, it's just like on Monday. As soon as that move happened Monday, how many of you tried to go fucking buy that stuff and you just couldn't because it's just the spread's moving and you can't tell how fast it's going? JRWG, you try to buy this on Monday, you have no clue. You have no idea. There's no way to go get in there. So that Friday buy was great. Got some profit, feel pretty good. You bought on the fucking, look at where you bought if you bought on Friday. You bought on the way down. But did you really? Did you buy on the bottom? I mean, is it going down? Okay. Obviously, there was some tightening, and we knew it was time to go snag that. All right. Coming into lunch, it's 11:23. FANG continues. Travel continues. NCLH 6.5, SKT 10. That wick up here was about 15. That again, lift. It's now holding up at this level a little bit. This little pull here. Let's go see what Uber's doing. Wonder what that's all about. Aerospace and defense continues. I know it's not that much momentum, but I'm imagining, or not imagining, I would have to say that the spread widening during lunch is going to cause this to really jump a few points across the board. Besides GE, it's going to be liquid through lunch. So, but these are all still trending. I know it doesn't look beautiful, but that's probably because you're not in position. Probably because you're not. Let's see. We want to get some direction on what are the bets right now. What are the bets right now on this OPEC meeting? Is this where the volatility is at? What's this? What's that time right there? 10:30. Let's see. 10:30. Dun dun. Let's not push it. Let's not push the. Let's not push the envelope there. Everything's just moving with the dollar. That's all. Everything here is dollar. All dollar. They're called ratios for a reason. If it's the gold to dollar ratio, that means if the dollar moves, it's going to move the price of gold. The crude dollar ratio? Oh, you buy it with dollars? Yeah. It's all dollar. All the dollar. All of those moves. Now oil, the betting is moving based on the dollar. The event is going to cause a price change. Bed Bath & Beyond, we're in position. Where's it going? To the trend line, which is at 39.40. It's about 40. Call it 40. Call it 40. Why? Because you have a bunch of supply in here. You have a bunch of supply. And you have a whole bunch of calls being bought. What happens? The resistance gets broken. The supply gets broken, which allows the gamut to now get kicked up. Acceleration starts. Market makers need to buy the underlying to hedge the delta. And price increases rapidly. And it can decrease rapidly as well. Oh, sorry, I didn't see the YouTube comments. MJ resistance. Brian says. There's supply in here. There's not one technical level or anything like that, I would say. But it's all around this 23 area for sure. And there's a bit of a trend line in here. But again, it's just sort of it's a zone of supply, just like what we just saw in these other charts, like the BBBY. When we talk about all of these, like SKT did, SPR, AMC, all of your meme economy tickers obviously did this because there's a holding of supply in here, and so market makers still need to be hedged against all of the contracts below. And so it gets into this tightening position where, again, what's the most likely thing that's going to happen from this tightening? It's going to go to the upside. It's going to go to the upside if it gets it has a higher probability of the upside because of the move it's already made. It's almost like a continuation pattern of this move here across the board. In the market overall is bullish. What's the overall sentiment in terms of how the market works? Well, there's always money coming in. The flows continue. We keep appreciating. 120 billion a month by the Fed. There's fucking more people. Are more people being born or more people dying overall? The population keeps going up, right? There you go. Use that as your fucking correlation. If the amount of people in the world keep going up, the market's going to keep going up. Why? Because wealth will be created. That's why. More people to work, build shit, spend money. LKQ continues. Again, this car parts auto sector that we sort of compile everything together continues to do very well. There's other kind of charts out there that have not moved as much, but they're still very bullish in terms of their move. This is very close to that upside breakout idea. Again, you're at a high, boom, 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 boom. If it breaks through these averages, that's very close. If that does make the move, then expect that chart. We're on the right side. We're on the right side. That's what matters right now. Yeah, you should definitely hold that contract. That is not a day trade one. The reason why I talked about that AMC and the triple BY the first time around when we first entered those, AMC on that over 5 support, and then BBY with where that level is with that trend line there, is because they have this long-term approach to them still, which is unlike GME, where GME is this constant gamma squeeze and to the downside move with the volatility, and the IV is just elevated past like 500% every day. Those charts do not have that tail end like GME because of the hype idea. Yes, they're still meme economy sort of tickers, but they do have a ability to continue to push the move instead of just catching all the momentum at the once, right? Instead of getting 30% in 5 minutes, they do 30% over 5 days, which is fucking better because it's not as risky. It's risky, but your downside is not as ridiculous, right? All right, Russell 2000's up a percent. The Dow up almost half, 41 basis points. Let's bring it around. S&P close to break even, minus 8 basis points, about to be positive here in any minute. And the NASDAQ minus 75 basis points. No one wants tech, everyone wants value. Long value, short tech. Brian asks, hey, since we're going long short caps, can we short the large caps that we were bullish on last year? Absolutely, my friend. Let me tell you about a couple shorts. We shorted Netflix through this move here. This was sort of the start. Shorted Netflix. We shorted Tesla. Some of you are saying, Tesla? Absolutely. Shorted Tesla. Now, first of all, I posted this chart a week after we started the move. This is the trend line that we were talking about through here, right? As soon as this candle started, we talked about shorting Tesla, right? We tried to go long, didn't work. This is about 7% lower. And then guess what? You get this whole move here. Feels pretty good to short that if you made a lot of money going long here. We tried to go long here yesterday, off the trend line, didn't happen. stopped out immediately. No go, not happening. We're not forcing it. We're going to go back to follow the rules here. We're not going to try to preempt that, right? Apple, big Apple short. We were long Apple a billion times last year. Shorted Apple, 300% on puts across the market. So there was a bunch of people that again, that was the average. Amazon, I keep saying don't go long, don't go long, don't go long. Everyone wants to be a buyer in here. You can't be a buyer in there. You can't. From opportunity cost alone, you can't be a buyer in tech. Opportunity cost alone, there's too many charts that just keep going up and you ignore. If you are looking through the lens of trading and you're saying, oh, this is possible, then somehow you're ignoring the other charts that just keep fucking pushing to the upside. Right? There's just some mental block. Again, if you're buying something, now there are charts, now you're going to say, well, there are charts that you're looking at that you're buying on the pullback, but that's because they're bullish charts already. They're pushing towards the upside anyways. And they're going to get flows. They're not big tech. If you're not able to make these trades and buy on this pullback, but you want to buy the pullback of tech, then again, you're just looking at something wrong. So again, where you spend your, when you need to think about the time that you're looking at charts as also as, you know, a bit of a currency here, right? You can't be looking at some of these charts that you just can't enter anyway, because what's happening is the more you look at those charts, the more those are what you're going to trade, right? But you're spending time looking at something that's just not there, right? And maybe it's ignorance, maybe you don't know. You do know. You do know. Because you wouldn't tell anyone else if you made those trades. Lift continues. I don't know about this hotbox thingy, heat biologics. I don't know why I call it hotbox. HTBX. Again, we're bullish on bios. This chart, we got big fucking moves up here. Now, I love the idea of buying down here, daily candle, but we gapped. Again, daily candle pull into support and you want to be a buyer. We make short-term trades on bios. How do I set up a short-term trade here now? I'm not sure. Got no clue. Not enough really there yet. Might have to just take some risk on a chart like this. I don't care that it's up 13%. It's just where it is. Difficult. I ask the questions, others don't. UNM now almost 6%. Remember when I said that was like 3% and then 4 and then 5? Now it's at 6. Oof. Yikes. Yikes. Again, our sort of car parts, the auto side. Do we have an answer to the why? No. We don't need an answer to the why. We just need to know when. Not winning. This chart continues to perform. That sector continues to perform. And I know I showed you this chart over here, and I showed you again over here. Dirty Dan, same idea, right? Dirty Dan is a part of that sector. That's why every time we talk about that break, we took the trade over here, push it. Now, fucking nightmare fuel over here, of course. Volatility, you got to get out of the position. It's just too much. You take the break. There's tightening, boom. I mean, it is what it is. What are you going to do? Hey, triple pillow top, two free pillows is moving. Casper sleep. GoPro continues again. I talked about when it breaks that $8 mark. Once it breaks the 8, all of those options, fuel it. It's gonna, you know what it's gonna do. It can't help itself. All those options in there, all of the options in there. Again, this chart is moving further and further up as it trades flat. This GoPro chart, as it trades flat. G-Pro. SPR continues through that trend again. It's getting closer and closer. Discovery continues again. Made fun of plenty of people with not taking the trend line buy here, and I mean, again, you want to trade something else? That's fine. That's fine. QFIN again. This move down here, I know it's hard to see, but again, over here when I talked about the tightening here, you got to take that trade. When I said it's a must, it's a must. It's a must. Yeah, GoPro's just all options related, right? Stock market's a derivative of the options market. That's really showing itself over there. All right, how we doing on travel? Travel's tightening here. Now, it's not going to stay tight because we're getting into lunch and spreads are going to get wide. We're going to lose volatility. We're going to lose liquidity. Free Willy trying to continue his jump. He hasn't started diving yet. It's a good sign for you longers. For DraftKings, I mean, you just keep pushing this position until, again, you took this trade from Friday. You either were going to take profit immediately on Monday after being up 100-something%, or you're going to be pushing it, and you know yourself better. So when do we sell it? If it breaks this trend line or it breaks a relative reversal point, depending on the length of your contracts. Again, you know yourself better. You don't need to play the market here. You just continue with your plan and push the position until you know when you're going to be making a decision. If you know if it just sits here for the whole day and doesn't do anything, that you would take profit by the end of the day because you're not willing to push it. So you would just get out of it already, right? So most of the time you're trying to beat yourself in these situations. You're trying to beat yourself you're trying to preempt your decision. You don't need to preempt the market. You need to preempt yourself because you can plan for whatever the market does. If the next candle is going to move downwards here, then you're going to sell at that opening. At the open, if it starts to sell, let's say price closed here. If it opened here, started to sell, you would take profit, right? If it breaks the low, well, you're going to take profit. You figure out where these points of interest are, that you would make a decision, and you're going to try to beat yourself there. The market can do whatever it does. We don't get to, we have an understanding that, it's probably going to go to the upside, right? Probably. When? Probably going to go test that 140. Yeah. GoPro? Yikes. How do I get emojis into our YouTube channel here? This is so much fucking better, guys. And then uploads automatically up here. Whew. Revolutionary. 2021. I have to make it private though. No one's here anyway. I can't find it. What I'm looking for is I have a little bit of cash. I want to take advantage of some spreads during lunch today. Buy something. Already so long. Kind of like what I wanted to do. Sort of what we did yesterday with Tesla. How about Twink? Where's my Twinks in chat? You have a very soothing voice. You should totally do some ASMR chat explanations for bedtime. I listen to it. I don't know who you are. Who is that? Are you a random or what? Or is that Ecto? Who the fuck is Bay? Exactly. I think it's Ecto. We will find out. It's a mystery. No, I'm Ecto. Oh yeah, right. Cuts. Yeah. Okay. Great stuff. Good stuff. There you go. Well, there's, yeah. Yikes. Look at that chart, guys. Yikes. Travel sector. I don't think there's really a trade. We just keep pushing positions. We get cash, we get cash. There's certainly going to be a lot to do tomorrow. Thought it was the intern. You guys are sick. We could make a OPEC bet. We could make an oil bet, which I mean should have. I mean, again, this the Gus chart, the leverage, right? The 2x. Already been using this for fucking ever now, right? As sort of our go-to. Probably should have already fucking made the bet, but we technically are already betting on what exactly is going to happen with sort of tomorrow's or now today's OPEC meeting and the way the price is going to move. And so again, we're going value oriented. If the economy is going to get going with reinflation, the whole idea, right? Then there's pretty obvious implications of what the demand for oil is going to be. We've really come out of that top feel of we topped out of demand. Sure, we're going to be using cleaner methods and there's going to be more EVs, but it doesn't change the fact that oil got beat to shit and it has to retrace, right? Let's see, what do you guys got for your position? You guys are up. You guys are still up today. You guys were what? You guys were up like 1,000 on Monday, and now you're up $350 on your position. Not bad. Viacom now over 4. Again, a lot of you continue to price watch. And I've seen a lot of you guys type in chat that, oh, wow, look at the Viacom chart. And you guys type that, and then you don't do anything still. That's part of the problem, right? Part of the problem. You've convinced yourself. By every time you see it, now you've convinced yourself further that you can't take the trade because you've missed it. You could have said that back here, over here, up here. Again, there's opportunities that present themselves, and the thing to remember here is that a trend line is support. With our rules of buying on support, these are trend lines. And what's happened here? This trend line's getting sharper. It's getting sharper here. You had a consolidation. It's breakout. yes, a consolidation will come again and you're going to get another breakout opportunity. But again, look at the amount of breakout opportunities you've gotten. Right? You get to take these breaks when you get them. The consolidations when you get them. Right? Take the breaks every time it happens. Boom. Boom. Right? Well, can I buy it? So you're saying that, can I buy it right now? Okay, again, you buy it once it breaks out of its consolidation, right? It's such a catchy phrase that everyone says it. I've even seen some of my old peers come out and give the old consolidation, breakout, consolidate, breakout, because it's just catchy, because it's the way you trade, right? And it's very hard to see that and then stop doing it. And even if you don't want to be, there's nothing you can do. You have to stick with that plan and that understanding, because that's the way you trade. No matter what kind of trading you do,
Market data connection lost.
you don't just get to randomly decide these things, right? We follow very strict
Market
sort of,
data
not even that
connection
strict, but
reestablished.
we follow the same ideas. That's the way the market works.
Market data
Gosh,
connection
continuing. I mean, how far is this going to go? How much betting? This could be just, again, the day trade into the OPEC meeting. You could just make one bet into the meeting, sell it right before, play it like an earnings bet. Just ride that. Again, the IVs are increasing because of the meeting. You can sell right before. You can sell right before, right?
Market data connection reestablished.
Reads continue. Okay, let's bring it back. Volatility pulled back. Still don't need to do anything on our end, managing wise. Dollar continues, right? Dollar continued. Looks decent. Looks decent. Now again, these yields have started to change. That's where you're seeing some of that extra volatility that came in. 2 years started to move. 5 year and 10 year have not moved. 30 years have not moved. Long terms have not moved. But the short terms are. What's the difference between long and short term treasuries? That's a very quick Google away. Ecto says, some of my old peers. Greg, is he a buyer now? No. That's not what I meant. But I would recommend that if there's catchy lines that I use, incorporate them into your conversations, and you might sound a little bit better than saying stonks and all of that meme ass shit that you guys say to one another. Incorporate some of the other ideas. You're going to sound like you know what you're talking about. And maybe, just maybe, if you sound good enough, someone will pay you for what you say. Sounds good. I don't know what he's saying, but it sounds good. Gotta be careful of those types. That's why we do it live. Be very easy to fall, right? Be very easy to fall for that shit. Yeah, imagine if I was making things on fundamentals, but it sounds like I know what I'm talking about. None of it's live. And it's like, well, see, I told you this was all fundamental here. I told you Fox was going to go up because of fundamentals. It's a good thing it doesn't go that way, right? That's why we do it live. Accountability. Accountability. In actual trading, right? It could go up or down. Those are my favorite articles in my favorite analysis. It could go up or down. Now I say that every now and then, and that means we're not going to trade it. No clarity, could go up or down. Okay, we're not going to be a part of that. We plan for one way, and if it doesn't go that way, we do not continue. Macy's is at the 420 mark. That's got to be a good sign. Okay, the big question I have here for today during lunch is, does the lower liquidity during lunch continue a tech selling, rising the yield, and then how much of that money that comes out because the yield's rising, selling treasuries, selling tech goes further into value, or how much is cash? We're going to be watching our macros. This seems to be holding the support again. I think this is enough times now that it's happened enough now that there's not really further downside risk on the tech side. Are we going to keep shorting tech? No. As soon as it fucking bounced on support the first time, that was it. Not going to short tech anymore because it's holding this level. Now our downside risk of shorting becomes a problem because the upside is becoming more and more likely as it holds, or the fact that it may not move at all, and that makes it even less. So it does feel like it does seem like we are holding this level on tech. So in terms of risk on the overall market, we know the other side of the market that we're trading continues to trend to the upside. So if our weakest link in the market of an average is holding its level, then there's nothing that's really going to stop the move to the upside on the equity market, even as those yields might increase on treasuries, even if risk continues to rise, volatility rises. Again, look at those charts I posted. It's very easy to see that volatility, it's on another market, and it's adding volatility to our market, but not risk. And you got to be able to take advantage of it, which again we've been doing. So we need to be mindful of any movement during lunch here. Its accuracy, not to be shaken. We want to continue to squeeze as much out of these, push the winnings as much as possible. And it does look like we're going to be able to push. We are going to be able to continue to put. I mean, if you look at it through this angle here, you have been able to push through every single fucking event here and buy more on this pullback last week with the yield increase. At this point, these decisions should not be being made intraday. So those of you that are prone to selling because of something that happens during lunch because you're watching P&L or something, like I've been saying this week, turn the P&L off. If you can't get yourself not to look at it, then fucking just turn it off. Because again, you're in profit and you're losing points, taking points off your profit, but it's not an actual position on the option or the underlying. That's a relative reversal point. It's not a rejection. It's just trending in natural lunchtime behavior, but you have a hard time sticking in that position, then turn the fucking P&L off, because there's been no reason to exit any of these positions. And again, on the pullbacks, these are our moments to buy. You can't be looking at those either, right? I gotta get out of here. The travel move is a very easy one to use as an example. I know it's sort of used it too much, but again, it's proving the point that from this Friday entry here that we took on February 12th on all of travel, you could have just held through the whole thing. Now, we were actively trading through here because of transition. We have some rules about transitioning, and so AAL, for instance, had a trend line here. On this pullback, we took profit, re-entered on the buy here. You could have either held through here, depending on relative reversals on your options. Most of you have riskier options, so you had to take profit on the second daily candle here. You rebought here. On Friday, this was Friday, we bought Friday over the weekend, and now you're pushing your positions. You didn't need to sell this day. You didn't sell yesterday. You certainly didn't sell today when you're up. So again, those of you, and this is just about every single chart that we're trading on the value side. I'm just using it because it's easier to see the sizing of the candles here. Some of them are not as large. There has been no, where is the signal? Do you guys have some fucking complex AI generated signal that I don't know about that tells you that you need to sell? Or do you just see fucking red on your P&L every now and then, right? And then, oh, well, shit, now I'm up, so now it's good. Again, remove some of that stuff because, again, just look at the overall picture. If you just did what price told you to do, you'd be doing fine. You'd be doing fucking great. Some of you are doing great. Some of you are still watching, trying to get you out of that. But overall, anybody that's on the right side of the market and continues to push through and bet towards this value side is continuing to be rewarded, right? Now, there's been some newer opportunities that are not tied to anything. This idea of active trading that we do, Lyft and Uber today, we've been watching. Could we take the trade down here? No. We didn't feel like the risk was worth these trades. Didn't feel like we wanted to take these trades. But the risk was not worth it on us. We don't even know what this is fucking tied into. No one knows. It's just on its own. You don't need to converge, nothing. We saw tightening, consolidation, and we talked about if it breaks this resistance, we want to be a part of it. So that's what we waited for. And as soon as that happened, and we also got a very good opportunity because of a pullback here to take the trade, and it converged with Uber as well. That's a trade that it could just be for today. That's 100%. That's 100% if you took these, right? That's 100% trade, 100% trade. You could just take the profit today. If you did a short-term risky trade for just today, 100%. You put $1,000 on it, there you go. You just came out with another 1,000 on top. That was it. That's all you had to do, right? You don't need to go fucking buy Junes or some ridiculous thing and say, well, I'm gonna go push this for a month. No. That doesn't make any sense. Now all of a sudden now you're turning it on the head that, I need to buy long terms here to push this. This is not tied into anything. We have no clue what this is tied into. What we do know though is that there is a technical opportunity based on how we trade for a plan that if it bounces on this support, we're gonna buy it. Lyft, if it broke that resistance, we would buy it. It offered the same support bounce like this. That was it. Pull back buy, push it. It's not a long-term trade. It's taking advantage of that move that's going to happen. You have to maximize that move with what you got, which again, you either choose short-term, intermediary, or long-term contracts. What are you going to do? If you're expecting a move right now, you take the short-term, riskier approach. What's your downside? Downside is if it doesn't fucking move. If it doesn't move, you get stopped out at break even because people are buying. It's tightening. People are buying. You're not going to get hurt there. If you waited 10 minutes, what happened? You probably didn't make any money. Probably didn't make any money. Where are you going to take profit? It's up to your contracts. You bought Marches. You might have already taken profit. You might have already taken profit from here. If this was 100% gain, this might have been 10% loss, 20%. Who knows? Depends where you bought. There are chances out there, though, right? There have been quite a bit of trades since last Friday, right? Now, again, it's so important to see that Friday. Buying on that was very important, but you also had the chances for Monday, right? You did have chances that Monday to still be a little late to get the trades. And again, the continues. All of these travel charts continue, energy banks. You can buy these at any time. They're longer term trades. You're going to need to stick with them a little longer, but they're trending, right? They're trending. You might be a little late, but you're still buying with support in on a trend. And the volatility is just helping. It really is just helping. It's just helping. And we get numb. Again, we get numb to some of these numbers. We get numb to some of those numbers. This 6% shit, getting 6% every single day on some of these charts, 5%, 10%. These are big numbers, right? You guys know the difference. It's a lot. ET flag. Not a flag, but tightening. Tightening for sure. Tightening for sure. Pennant vibe. Now, is it a pennant? Doesn't need to be anything. It's tightening. Big move was here. What would you do in these? You're looking at through the lens of trading? Well, you, of course, bought through this break here, this 7 break. Okay. What happened here? Well, we had a pullback, 2 daily candle. Now, of course, there's all kinds of mindsets through here. You're buying on the support. Over here, you could, if you had a long-term position, This was about relative reversal point, so you're pretty close. You're pretty close, so either you had long terms and you held through this move, or you took profit on this move as it came through, and you rebought here over the weekend. You're pushing the trade. If you're not in a position at all because you took profit or you weren't in there to begin with, yeah, you're taking the break. The tightening, you reach an equilibrium and you find out where it comes out on the other side. You come out of equilibrium with bid, which is more than likely, again, probability-wise, continuation of here to the upside. Absolutely. You wait for that tightening, you see it, you can see the price right now. You're witnessing it right now and you're looking at it. You'll know when it changes from that point right now. Now, lunch gets a little hairy, so it's probably not today. It's probably not during lunch, right? Unless it happens clearly. You're just looking for the break. You're looking for a break, and I mean, again, it's a bit of an average of these. And what is it? Around like 810, 815. What's this? 815. Maybe 815 or so, right? You'll see there's a point there. There's a point in there somewhere. Where that supply breaks and the equilibrium is shot. It's going to start moving. Velocity comes through. But again, this is opportunity, right? This pullback's opportunity. This tightening's opportunity. Because it's a point of time when you can tell what price is actually doing. You actually know what's happening. You'll know which way it's going based on when it comes out of this point. That tightening allows you to actually finally see what the hell is going on with price. It's like consolidations when I draw patterns. You finally understand what price is doing. That's the whole point of using sort of the classical patterns that I look at for the breakout. Because as soon as the breakout happens, you finally know what the hell is going on. All of the price action before, you could be bouncing between levels and understand that a bit. But you can't really put a plan through other than those simple ideas. As soon as that break happens, you understand what is occurring here. You're breaking out of consolidation. Again, you get an idea of velocity, how quickly it's going to make the move. These kind of things are important, right? Same thing up here, right? It's the same thing with these tightening ideas. Like, oh, okay. Now I got it. So no, it just keeps going. I mean, again, just imagine. I couldn't imagine like removing some of the trends, like ignoring trends is too much. You guys are all trendy kind of people, right? You all see trends, and I mean, how many of you are still wearing cargo shorts? I mean, I think Brian still wears cargo shorts with those big pockets. But I mean, let's just be honest. I mean, you guys don't wear out of trend clothes. How many of you wearing fucking overalls, right? Maybe Met, but I mean, let's just be honest. You guys follow trends. You got to follow trends with your trading, right? Follow the trend. And really the most important part of that is capture the trend, right? Become the trend. Hector says, damn. Hey, I'm just trying to be blunt, guys. I mean, it's no shade. No shade at all. You guys, I wear the same clothes every day. My New Year's resolution was to be a little bit more fashionable. Stop wearing the same fucking dress shirts and dress pants, blazer every day. I don't even fucking go anywhere. What am I doing? Stop looking like a vanilla guy here, all right? It's pretty shady over here. It's all right, guys. We're going to get through it together. It doesn't matter what you look like, what you wear. Judge you guys on your trading. So, again, enjoy your own pleasures. Anyone tells you can't enjoy something, tell them to go fuck themselves. Let people enjoy their own pleasures, whatever it may be. Why do you gotta dictate what I like? I can do whatever I want. I'm not interfering with you. Random person in the chat wears onesies. That's awesome. It's good for you. Hog. Did you guys get on the hog? I don't know. Probably not, based on what I've seen in the option chain so far. Based on what I've seen so far, how many of you are hogging it? Let's see. Let's see. Let's see. Let's see. None of you. None of you are. I know you're not. I know you're not. I know you're not. Now, there's a lot of liquidity being fucking provided, which is very interesting. So the sell side, there's a lot of asks out there. Big boy, we got all kinds of market makers in the hog, the hog chain. What's going on over there? But what is going on over here? Maybe not so much the options, but certainly the underlying. Not the options, not so much what I mean. I mean, they're scattered through there. But yeah, certainly a lot of liquidity. There's a lot of asks out there. Market makers. So what does it mean if there's a whole bunch of market makers being involved on a ticker that doesn't really feel like you need that much fucking liquidity? Why do we need so much liquidity on fucking hog? Why do we need every fucking market maker over here providing liquidity, selling a fuck ton of calls right now? I wonder if we can use some of this information to predetermine what's going to happen with this price here. If there is, I mean, right now there's almost 10 to 1. 10 to 1 asks to bids on options. Why are they trying to write so many fucking calls? I wonder. They're out there. They're providing. You got an oversupply, you're probably getting a good price. You're still getting a good price, even where price is right now. 4% on the underlying. You're still getting good price on the options. There's a lot of supply, providing a lot of supply. Not that many people involved. Barely anyone filling them. Barely any volume today. Really makes you think. I'm looking. Okay, I'm gonna watch time and sales and see if any of you start buying shit. See if who we can call out in chat. Someone's gonna buy a hog. Let's see who we can see. Let's see. We'll be able to tell by the sizing because you guys buy things at one at a time. So if I see a bunch of ones come through on come through ones, that's usually when I can tell if I say something and you guys are buying something, because I'll see a bunch of ones pop up. I'll be like, there's my chat. There's my chat buying 10-cent call options. There they are. No, that's exactly what I mean, Agdo. Leave it there. Leave it there. No, he deleted it. See, just like you in the option chain, you try to delete that one, but we see you. We see you. You'll never catch me. Yeah. What are you using You're using the algos on IB, or excuse me, you don't use IB, but you can use algos to hide your orders. How can we know what you're going to do if you don't know what you're going to do next? Exactly. That's the greatest thing about trying to figure out what retail's doing. They don't know. That's why we have to We just plan based on what price is doing. We know how they'll react to certain prices. That's why we draw lines on our charts. All right, getting pretty lunch vibed out. Let's just take one more look. Again, low liquidity lunch, not much going on. I mean, there is liquidity in some places, but again, low volume lunch, not much going on. Not much else to do. Big moves on the market today with yield spike, bounce back. Nothing to really see here. Our positions continue to push. Volatility does help our position, so a little bit of elevated volatility, 3% on the spot VIX today. But on the bet side, when we look at the derivatives not really showing much movement, sort of coming back to break even on the day. So again, derivatives that dictate movement, the bets on volatility, not sustained, basically rejection across the board. And then on the yield side with bonds, they spiked, but they basically have stopped movement. They might climb a little bit during lunch because of the lower volume, lower liquidity. That's entirely possible, but it also could be the other way, that the ETF side that tracks bonds, that droppage of volume on the equity side from ETFs, it actually allows for a little bit more liquidity on the over-the-counter bond market. So it's hard to exactly say. Shouldn't be much of a problem. Again, if it was going to make a move, it would make the move. It would have made the move during that time, leading towards lunch as the volume started to slip. So the fear should be out the window. And again, we buy on other people's fear and mistakes by staying composed, trading the right side of the market. And again, a lot of you you're trading some very, very good tickers right now, along with what we're looking at through value. So I will see you guys at close. Hopefully this stream was a little bit better on the YouTube instead of Discord. Discord absolutely blows. So we'll see if this works into the future. Let me know in Discord if this was better or not, and if so, we'll do this, and I'll make it a little bit better look. Maybe include some of our stuff from over there into the chat, and we'll figure out what the best way to do it, because it is a little hard for me to look between the chats and everything. But I'll see you guys at close, maybe 3:45 or so. We'll check out closing action together. So I will see you then. Enjoy your lunch, drink some water, get out of your chair, don't look at price too much, don't look at your P&L, and as always, fuck Facebook too. So I'll see you guys then. Enjoy.